So we're here today with Dorel Blitz from Personetics for our latest supplement on how things are going in the cloud and in banking and otherwise. Dorel, you've been on the webinar circuit for a while now during the coronavirus outbreak, but perhaps we should start about Personetics and maybe you can tell us why you're on the webinar circuit so much and how Personetics is such a huge product at the moment on the market.
Thank you, Andy. So we are a global category leader in AI and personalization in financial services. We are a 220 employees growth fintech company, around 10 years old, backed by some of the world's largest VCs like Sequoia and Lightspeed from Silicon Valley and others. We also have two banks as investors, Santander, one of the largest banks in Europe, and UOB from Asia. And we are doubling our growth rate for the last 5 years. What we are really focusing on is really helping mostly retail banks to become much more smart, proactive, and knowledgeable with their own clients. And we are doing that by really harnessing the power of AI and maybe the most important asset of banks, which is financial transactional data. And we are able to quickly access and analyze the bank's own customers' financial transactional data in order to deeply understand the customer's real-time financial behavior, and by doing so to really drive meaningful, personalized, proactive engagements, and by doing that, so also to drive great sales and other engagement opportunities for banks. So that's about Personetics. We are working around over 50 global top-tier banks all over the world, and really with our white label solution, really able to help banks to accelerate their own innovation, differentiate themselves in the market, and to drive significant business impact.
Okay, there's been a lot of talk about on-prem versus cloud, and when it comes to working with customers, I assume you have an opinion about whether a customer is completely on-prem or has a 50-50 split or what have you. How does that work when it comes to working with your product?
So out of our 50 global top-tier banks, really the world's largest ones, still the majority using on-premise, but we are absolutely seeing a great move into cloud capabilities, mostly private clouds, but actually just recently we went live with some French banks using also a SaaS model, a public cloud, where Personetics actually developing and managing everything by ourselves. I think it's inevitable, and we are finally seeing banks not just waiting for their own regulation, but actually moving big workloads, exactly like the Deutsche Bank and Google moving into a full workloads in the cloud infrastructure. A good example will be maybe Lloyd's using Google, HSBC, for example, or others using the Azure or and we are, of course, a gold partner of all of these partners. I think moving into the cloud gives an amazing, a better cost-income ratio for banks in terms of cost efficiency, but also a much better agility and flexibility, and even a much better secured way to work with clients. A lot of banks are, they started with basic stuff, finding your nearest ATM or branch using Google Maps, but now finally they are moving into a much bigger, deeper capabilities like, KYC, onboarding, cybersecurity, compliance issues, and of course by Personetics moving into the world of customers' engagements and personalization.
Okay, but obviously every jurisdiction globally has a different approach to digitalization and cloud and what have you. I mean, South Korea, for an example, is a huge market when it comes to Internet of Things, 5G and everything else. So have you had different experiences when it comes to different jurisdictions as well with your banking partners?
Absolutely. For example, we are seeing that right now in Australia with the largest banks, or in Korea when we have a big local client, a Hyundai card, one of the largest credit card issuers in Korea. And we are seeing how these really amazing, innovative banks, or DBS, which we are also working with, one of the world's largest, most innovative banks, how they're really taking that forward, already developed their own data lake and already working on cloud infrastructures, AWS or Azure mostly, and how they are really pushing that forward, and the time to market, which is really amazing, the ability to scale and the ability to provide a deep, quick access is really amazing working with these banks. I think it really comes not just from the infrastructure description, but also from the management, from the top-down management support and attention and deep understanding of the values and the future of banks and how to really want to quickly adapt to market changes and drive significant impact into the market. And cloud is a great facilitator or accelerator into that.
But is there any specific jurisdiction that maybe you can point out as a best case?
Yeah, I think right now what we are seeing happening in the Australian market or the Singaporean market is quite amazing. We are seeing a lot of, and we are working with a lot of banks in this region, how they are really taking the cloud infrastructure and also the data lakes infrastructure and quickly develop all sorts of specific use cases, specific products and solutions, harnessing the power of that, how they can quickly plug and play, not plug and pray, and working with those kind of, systems in the market, and how they can really drive a much better change and ability to really become much more important to the clients, really helping clients under this COVID-19 to better manage their financial lives, to stay on top of their finance, to drive business-driven value using these, architectures and these data lakes with all sorts of specific use cases. So absolutely, Singapore and Australia. I think right now in Europe, I think Western Europe, and we are seeing that already in innovative banks in Spain, like Santander or BBVA, or even some of the UK banks finally moving into that. I think the US is a little bit much more, taking the time, I would say even conservative, but I think it's a case by case. But this move that it comes from East to West, from our perspective, it's inevitable. And under the COVID-19 and all the pressure, banks will be forced to move into these much more efficient capabilities, even using new core banking systems, cloud-based ones, an ability to deeply and I think eventually better serve their own clients.
Okay, and clearly there'll be the cyber issues as well related to this, of which Israel is very well known. However, we haven't come to you about cybersecurity today. We've come to you more because of MiFID 1, MiFID 2, and is it MiFID 2.5? Is it MiFID 3? I'm not sure anyone knows. Do you?
No, actually, no one knows that, but I think, as Personetics, we have a deeper capabilities and experience working with MiFID. We are actually helping banks to proactively engage with customers and provide a much better digital sales opportunities, even under the wealth management mass affluent clients. And of course, we are able actually to help banks with this really long, tedious process of the onboarding of customers to break it into specific solutions or specific capabilities where we can, start with the client a quick onboarding, asking only 2, 3, 4 questions and start to show some value and then going back, keep going with the access. So instead of just having like one very tedious process, we can break it. We are also able to help customers with opt-in, opt-out for specific, actionable advice or actionable solutions. But I think under the COVID-19 and of course under the MiFID, customers are really looking right now to do something with their money if they have enough money, and they are looking for better understanding and better access to the financial markets. I think banks should do a lot of work around that. Robo-advisory as a solution is having a lot of challenges, I would say, and I think banks should really using this MiFID actually to break it into specific silos and quickly engage with their even mass market clients, not just the mass affluent ones, and helping them to move their own investments right now or their own savings into other markets. We are seeing great numbers right now that the amount of deposits in the US market is dramatically increasing right now, all over the world. And banks can really seize this opportunity to better engage with clients and helping them under the MiFID and our capabilities to break this kind of tedious process to move customers and their own money into the financial markets. And as you can see, the financial markets are still, growing, and we are quite optimistic about that.
So we've noticed this. There was a few press releases over the last few weeks that because of betting shops in America being not so populous at the moment, a lot of people are moving on to online investments. We actually saw a press release yesterday from Vanguard saying that Vanguard are growing their market share because a lot of small investors are going to them at the moment, which bodes very well for the market. But how data-centric are these approaches, and how much is this approached as data rather than customer engagement? And how do you see the data-centricism of how we're approaching this problem?
That's a great question, and actually we are working with some of these names that you've just mentioned, and I think there's a lot of opportunities right now for the Vanguard and Fidelity and Schwab, even in the UK market, to really increase market share. But I think on the other hand, banks are really trying to seize this opportunity from the other side. I know what Barclays or HSBC are doing right now, and now they are trying to, first of all, to have a much better understanding of their own customers' financial behavior, and they can use, of course, open banking mechanisms in order to really in an aggregated, holistic way, better understand customers' financial data. they are looking on a short or long-term savings and other capabilities. And I think that's where banks should really start. This is not the personalization per se or the engagement. It's first of all how you as a bank really understand your clients, how you can build your relationship model, and only then think about the monetization model of that. And I think banks right now are taking these kind of steps instead of just running around and providing all sorts of basic solutions. They are trying to start with deeper understanding, holistic view of their own customers, and then build the right strategies upon that to provide personalization and engagement in a way that really will make sense and increase the conversion rates that these customers will actually move into upsell and cross-sell opportunities. So this is not just to increase engagement and trust and intimacy, but this is mostly about providing deep value, and we are seeing the process that banks are developing, starting with day-to-day, basic insights and alerts and recommendations and advice, and then building the specific journeys, even automated financial wellness programs as we are providing by Personetics to help customers to quickly, build their own long-term savings using financial markets, even IRA or ISA products.
Okay, so how many customers, data or customers, it's hard to say these days. How many customers does your product touch when it actually comes to Personetics then?
So today we have access to over 70 million clients globally through our 50 global top tier banks. And it's really, we are showing a lot of, by analyzing all of this data, we have a really great global and regional understanding of how customers are adapting and behaving and working with these abilities of banks. We think it's inevitable. I don't know what you think about the Tesla right now, the Tesla stock price, which is absolutely amazing, but we do believe in self-driving cars, but also in self-driving finance. We believe in the ability of banks to really, be there for their clients, to really help customers to fulfill their financial goals, to fulfill their social contract between banks and clients, and really helping customers to better manage their financial life. And this is not just FOMO. This is not just customers' fear of missing out, needs to do everything by themselves. We actually believe in JOMO, joy of missing out, where banks can actually take this role and help their own clients in an automated, AI-driven way, helping clients to better manage their financial life in an almost frictionless, seamless, invisible engagement. And by doing so, we believe this self-driving finance journey, where banks will move through the ladder, maybe it's 5 steps like the self-driving cars, banks will be forced to become much more smart, knowledgeable, but also actionable and proactive with their clients, and drive great, I think, sales opportunities and service opportunities. And it's really value-based driven, I think, approach that we are seeing in the market. It starts by better servicing the customers, but of course also ability to better sell to these clients and increase market share, and of course also the ability to the customers' engagement and trust and loyalty.
Okay. With that in mind, obviously we have this 70 million people that are involved with your product, and a lot of them will be looking at investment opportunities. You just mentioned Tesla, who's nicely listed on the NASDAQ exchange there. But we've noticed one particularly strong return in banking, which is JP Morgan, which I believe has outperformed the Dow Jones Banking Index, I think, for 600 times or what have you. Will your app be particularly, interested in the JP Morgan market? And for that matter, JP Morgan is also using all 3 cloud providers, as far as we understand as well. I mean, this bank is just particularly a big story. Just explain, because they recently did a survey and they said Azure, AWS, Google Cloud Platform. Obviously, Google Cloud Platform is the least used of all of the 3 at the moment. Do you believe that will change? Do you think this is a good thing that JP Morgan's picked this up as Google Cloud needing a little bit more market share? How do you view that?
First of all, I do believe that this multi-bank approach is the one that will be dominating the market. I don't think banks will be married only one cloud. I think there is a big differences between the Azure and the AWS, or the specific AI solutions that you are getting today through the Google Cloud. And it's really different on the specific capabilities and the specific services that each one of these vendors are providing. I think right now banks are using those kind of, again, multi-cloud structures and services to manage all of that by themselves. And it's really a case by case. Again, JP Morgan, it's an amazing, success story as a bank, and we are seeing the numbers. and we have done some work in the past with JP Morgan Chase in the US, so we know them quite well, and they're really leading the pack. I think in the cloud infrastructure, these banks should really have, and I'm sure they have a very good cloud strategy of how they actually want to move a quite big, significant workloads into the cloud, how they're willing to drive change, how it's going to affect three main numbers, which is cost income ratio, customer acquisition cost, and cost to serve, and how it's going to impact their bottom line. And I think this is where we are seeing banks right now moving into that. They're using all sorts of, Dockers and containers and Kubernetes and all of these fancy, shiny toys, but really the ability to manage all of this cloud infrastructure in one space. And again, to specific segments, to specific services, find the right one.
Jamie Dimon is known for his fortress balance sheet approach. Looking at what you're saying and hearing about what you're saying, that is potentially something that we could provide to customers to finally make them understand that saving is good, and that what JP Morgan is doing with their fortress approach to their balance sheet is the right way to think. Absolutely.
I think that banks should take a much broader, bolder role with the clients and not just sit back and wait for own clients to come back. What we are doing as Personetics under the COVID-19, which is I don't think it's going anywhere right now, we are able also to detect, for example, stress indicators in real time and to understand for the retail or small business or wealth managed clients, all sorts of income or cash flow deep stress indicators, and to understand when customers have been impacted or about to be impacted. We are doing it much more faster and deeper than what banks are doing it today. And by doing so, we are helping banks to actually proactively engage with these customers, helping them with all sorts of relief and recovery options in order to avoid delinquencies. Because as you know, Andy, that's going to be the biggest problem. It's not liquidity, it's actually delinquency. And we are just starting this process. I mean, Q2, Q3, reports are coming up, and this is where we are going to see a lot of problems coming. And I think we are really helping banks right now to take a bolder, proactive approach with their clients. Not just sitting and waiting, but actually detect, prevent, and proactively approach their customers, helping them to avoid these very stressful, collection processes.
Well, looking at Santander's position in Europe, I think they've chosen the right supplier. Dorel, I just wanted to say a massive thank you. That was really, really interesting to hear your thoughts about cloud, about the global banking market as well. And again, thank you for your time. Hope that we can come back to you in the near future.
Thank you.
Great interview.
Thank you, everybody. Thank you, Andy.